The May and August 2020 strategic case study is based on the fictional business of Runnabout. Okay, so we'll see they are a hoverboard hire company. And what we'll do over the course of this pre-scene analysis is analyze all of the information covered in this pre-scene document. So we're going to go through it page by page. I'm going to flag up the most relevant E3F3P3 theories as they relate to the information in the pre-scene. I'll talk through likely exam issues and any points of interest that I deem to be worthy talking about. Okay, so let's get right to it, starting with this introductory section. So you're told you're a senior manager in the finance function at Runnabout, the parent company of the Runnabout Group. You report directly to the board, you advise on special projects and strategic matters. Runnabout is listed on the stock exchange in the country of G-Land, which is large, very large in fact, because it's got 1 billion people, and it's also prosperous. So this company, Runnabout, operates a pay-as-you-go, so a for-hire hoverboard rental service. Okay, so we'll be talking all about what hoverboards actually are, because you hear the term and you're thinking of some device where you're floating above the ground, and it's not quite as technologically as advanced as that, of course. And so G-Land, we're told, is suffering a little bit with traffic congestion and resulting pollution. Okay, so this means that alternative modes of transport, more environmentally friendly modes of transport, are going to be sought with this kind of environment. And of course, as a prosperous country and as a massive country, 1 billion people, so we're talking about, two countries in the world being more or less the same size, China and India. And I think there are reasons to believe that this market is kind of modeled on China. Okay, so we know that China suffers, for example, with traffic congestion, with pollution. India does too. A prosperous country, so China becoming more and more prosperous. So the citizens of China have ever higher disposable incomes. On the flip side, though, that means higher wage costs for companies like Runnabout. And we're told that in G-Land, there is a currency that is the G dollar. So that has implications, obviously, for exchange rate risk and exposure to adverse exchange rate movements. So we've got to watch out for any partners, customers, etc., that they have overseas. And the expectation is that Runnabout adheres to international financial reporting standards, so nothing surprising there. They're listed on the stock exchange, as I said. It's a well-regulated exchange, and companies on the exchange are expected to adhere to the G-Land Code of Corporate Governance. Okay, so let's unpack this opening section a little bit. First of all, you're clearly moving up in the world. For those of you who have done the operational case study exam, the management case study, you would have started out as a lowly finance officer dealing with day-to-day issues at the operational level. Now you are dealing with the top people at the company, i.e. board members, the CEO, the CFO, etc. And you're advising not on day-to-day issues, but you're rather advising on strategic matters. So you've got a long-term strategic focus. Okay, so that means a 3 to 5 year time horizon. So you're interacting with leadership, and you yourself need to show leadership. You need to make recommendations that make sense for the company over the long term. What kind of products and services, what kinds of markets, what kind of long-term financing should you put in place, and how should you manage long-term risks? And as I said, you're dealing with the board, and you need to understand not just the narrow operations of your own business, but you also need to understand the wider context within which your business operates. Okay, so what does that mean? That means you need to understand the competitive forces impacting on your market. You need to understand, obviously, the consumer. You need to understand the regulatory bodies that impact on your market. And that's going to be crucial in this particular pre-scene. Regulatory bodies have a big say in how a company like Runnabout actually does. Okay, so they can cut off their business overnight if they so wish, as we will see shortly. You need to think about your impact on the environment. You need to think about your impact on society at large. So lots of stakeholders that you need to be thinking about. So obviously, as a quoted company, as a stock exchange listed business, there are pros and cons that come with that as opposed to being a private business. The main pros relate to, more financing options. So you have the availability of equity funding, not just debt. And that's important in the context of this business because we will see they are massively indebted. So they really cannot take on more debt. That means they should be looking maybe at issuing shares if they wish to make some big strategic move that needs a lot of financing put in place. Obviously, there are reputational benefits that come with being a stock exchange listed company. People tend to know your business better than if you're private. But with that attention come drawbacks. So you've obviously got more public scrutiny. If you slip up, the press is all over it. And you've got pressure from banking analysts. You've got investor calls. You need to explain to them such and such a strategic move. And you have pressure from shareholders who are expecting a return in one of two ways, either through an appreciating share price or dividends. And ideally, that you would have some combination of the two. So thinking of the objective test subjects, E3, F3, and P3. Some of the big areas, I think, relating to this pre-scene. First of all, E3, recommending strategic options. As I said, as a senior person now at the business, you're expected to comment on matters of strategic long-term importance and to make sensible recommendations. Digital strategy is going to be important. I think, there are a number of hints throughout the pre-scene. Obviously, the technology is a massive consideration in this industry. So we'll be talking about big data, for example. We'll be talking about the Internet of Things, artificial intelligence, and mobile phone use. With P3, it's all about managing risk, and there are many risks facing this business. We'll also talk about cyber risk, which is a newer risk introduced in the 2019 syllabus by CIMA. And with F3, it's all about securing the right long-term funding and having the correct financial strategy put in place. So, I've already hinted that it's China, okay? That this country of G-land seems to be closely modelled on. There are a few hints. And, this is a massive market, obviously 1 billion people. With China, they've got a population of around 1.4 billion. And the urban population is growing all the time. So 831 million people living in urban areas in China by the end of 2018. That has relevance, obviously, for this company as well, because they're not really going to be targeting rural buyers. They're going to be targeting commuters, people operating in city centres. So growing urban areas, that's going to be playing into the hands of Runnabout. And there were 165 cities in China that had private bicycle sharing systems in operation by June 2018. Okay, so bicycle sharing was kind of the first such service for these last mile transport hire services that we'll talk about in a while, with electric scooters, electric bicycles, and hoverboards coming in afterwards. But it was the bicycles for hire that kind of paved the way. The market share of bicycle travel in China has interestingly increased from 5.5% of travel to 11.6%. Okay, so it's growing in importance. And automobile travel is actually declining in importance in China. So whereas before, automobile travel represented 29.8% of journeys, it's down to 26.6%, okay, in urban areas in China, since those bicycle sharing systems were implemented. So clearly having an impact, clearly that's going to be good for the environment, and clearly it represents an opportunity for companies like Runnabout. And according to the World Bank, China's urbanization rate is expected to reach 70% by 2030, when the urban population will exceed 1 billion. So we're going to add 200 million new people to urban areas in China in the next 10 years. So that is a big additional market to address. Okay, so we'll see later on when we look at the financial statements that this seems to be a massive company. In fact, I was so surprised when I looked at the financial statements for this business. I thought there was an error, because we're talking about a company with revenues of in and around 90 billion, okay, for a hoverboard hire company. Okay, so we don't know the exchange rate because, you know, that 90 billion G dollars in pound or US dollar terms might be, you know, a tenth of that. But even if it's, say, you know, a tenth of that in terms of pounds or dollars, then you're talking about a company with, you know, sort of 9.5 billion in revenue, which is massive when you think, you know, it's a hoverboard rental service. It seems to be out of sync. And I was so surprised by that I actually contacted CIMA and I talked to them about it. I said, this surely is an error. They said, it's you know, it's not actually an error, because the idea is this market is so huge, just like China, that there is such you know, it's such a huge market that you can actually make those kinds of revenues. So that's the market we need to keep in mind throughout. It's very similar to China, okay? It's important also to point out that G-Land is a fictional country, so we cannot assume that it is China, but lots and lots of hints that it's very, very similar to China. And I think it's a useful model to keep in mind, okay? The micro-mobility industry. So we're going to be given background on, you know, where this came from and, you know, how it has advanced over the last 20 years. It's been around since the early 2000s, micro-mobility. And it's all about covering the last mile of a journey. So you have commuters who use public transport or you know, public transport to get from the suburbs to the city centre, but they still have another mile or 2 or 3 to go to their office. So they need flexibility there. They need something fast and efficient. So commuters are grabbing a bicycle, a scooter, a hoverboard to get to their offices. Okay, so that is more or less what it is. And what micromobility does is it kind of augments what already exists, the traditional public transport, so buses, trains, etc. It's not replacing it, it's adding to it, okay? So you're not going to take a hoverboard, you know, from the suburbs all the way into the city centre and cover 10 miles or 15 miles, okay? You're going to take a bus, a metro, a train to cover the majority of that journey, but it's this last mile that these bicycles, scooters and hoverboards are covering, okay? Micro-mobility. So with the traditional public transport, you know, it's quite cheap. It continues to be appealing in that way. It's government subsidized in many cases. And the problem with it is it's inflexible, okay? It's not going to get you to the door of your office, for example. And we're going to see the role of government throughout this pre-scene. So obviously government is often covering traditional public transport, okay? And so far, most of these last mile services are privately run businesses, but there's always the potential for public-private partnerships. So if Runnabout demonstrates to the government the use of these services, how convenient they are, how good for the environment they are, etc., then they can, you know, win over local authorities and perhaps open up you know, a way for public-private collaborations. So obviously these services are really fast, really efficient, particularly in rush hour traffic. And obviously that's when a lot of the use is taking place. It's, you know, 8, 9 in the morning when people want to get from the train station or bus station to their offices. And then, you know, it's 5, 6, 7 at night when they're returning, they're going back the other way. So you know, the fact that they're easy to maneuver, between passengers and between traffic, between walkers, etc., makes them very appealing. So there are a number of factors, relating to the pest analysis, or the pestle, which you've come across throughout your enterprise studies. It pops up again in E3, which I think favour Runnabout. First of all, the rise in demand for more environmentally friendly services is obviously an important societal factor that is favourable to Runnabout. The rising use of smartphones and broadband, etc., is a technological factor that enables users to download the applications that power these micromobility services. A rising middle class in China, for example, and probably in G-Land as well, means there's more disposable income, so people have more money to pay for these services, this convenience, and the sharing economy, which is a term you've probably heard plenty before, is becoming more and more popular, particularly with younger people. So there's a move away from ownership towards access, access to services like Spotify, for example. You don't own CDs anymore. Rather, you get access on a monthly rolling basis to all the music you can possibly have, but you don't have it in your hands. It's not tangible anymore. And you think of car hire services, the use of Uber and the like, Lyft, etc. And people are opting for these services over owning their own cars. And I think that's going to be more and more the case. There are some drawbacks, of course, with this sharing economy, because, what you tend not to own, you care for less. And there are signs throughout this pre-scene that, that these hoverboards are actually handled quite roughly by people. And that obviously shortens their longevity, which is obviously a cost for this business. So let's take a look at the first mover in the micromobility space. An old, reliable, bicycles, Bicycle sharing was the first real entry into this space in the early 2000s. So what would happen is, with bicycle sharing, and it continues to be a very popular option in G-Land, is that you register with a provider to rent bicycles on a short-term basis. And the bicycles are kept at, just like the image here, in docking stations, or docks. So they're scattered throughout the city centre. They're close to offices, they're close to train stations, etc. And users release a bicycle from a dock by identifying themselves, usually by swiping a debit or credit card, and they hire the bicycle then and pay by the minute, etc. So we're already seeing, potential risk here coming from P3, cyber security. The fact that companies like Runnabout and bicycle sharing services have access to this information means they need to safeguard very, very sensitive information like credit card details, etc. And we'll be talking about that throughout the pre-scene. So providers locate docks in places that encourage one-way journeys, so they're not return journeys. So for example, city centre bus and railway stations are a very convenient pickup point for commuters in the morning. Then they ride to their major office buildings, so you likely have docking stations close to some of the major office buildings as well. So very cheap, very convenient, environmentally friendly as well, and is faster as well than, getting the bus to cover the last mile or two of your journey, especially in rush hour traffic. So plenty of benefits. And peak demand, we're told, tends to fall during the morning rush hour and the evening rush hour, but there's also plenty of demand throughout the day. You've got students using bicycle sharing schemes to get, from their accommodation to college campuses. You've got tourists, exploring the city using these bicycle sharing schemes as well. And of course, in cities, you've got big populations, large numbers of flat dwellers who live within a few miles of the city centre, and they want to get into the city centre to do shopping or whatever it is. So you've got plenty of customer segments there. You're not just relying on any one group, i.e., the commuters. But there is a little bit of uncertainty at this stage as to whether bicycles are always going to be available, okay, particularly during those rush hours, which can lead to frustration with customers. So bicycle sharing schemes, as we said, came into being in the early 2000s. They've grown a lot since, but there is actually some controversy about their use. They've been subject as well to lots and lots of competition. So what we're seeing is, as accidents occur, as people use them in the incorrect way and are careless, it causes accidents. That leads to negative press. But you've also had a massive influx of competitors into the bicycle sharing space. That has actually affected our business, Runnabout, in the early days of its operations, and it's actually pivoted to hoverboard use, and they've done it in a very clever way, I think. So illegal to ride bicycles on pavements, that's a bit of a drawback, or in pedestrianised areas. So you're riding with the traffic on the street. That makes it a little bit riskier than using, say, hoverboards, because you can actually ride those in pedestrianised areas and on pavements. So I think as well, looking at the bicycle sharing part of the market is going to be useful in that it flags up issues that have affected that particular segment of the market that will eventually, I think, occur in the hoverboard space as well. So what Runnabout should be doing is looking at all of the legislation that was passed with bicycle sharing companies and anticipate that that will happen in their own space, okay? So we're going to see, so it was made illegal to ride bicycles on pavements, first of all. Could happen to the hoverboard company. And we're going to talk about a few other things here. There's an increasing number of injuries involving cyclists given the popularity of these services. That obviously generates negative press and led to a requirement by the authorities to wear crash helmets, okay? And what we'll see is that this actually proved to be a deterrent to new users taking up these bicycle sharing services. And we'll see that more when we look at the specifics of Runnabout's case. So interestingly, it says here that, the bicycle sharing schemes actually don't have responsibility for ensuring that the people who use their bicycles wear helmets. Okay, it's up to the user himself or herself, but they could be fined if they fail to wear a helmet. Okay. And another thing worth pointing out here is that strict legislation has been introduced to reduce risks associated with riding bikes owned by sharing schemes. For example, the operator is liable for ensuring the bicycles are roadworthy. That seems sensible, but obviously it represents a cost to these bicycle sharing companies. Most operators require users to return a bicycle to the dock immediately if they believe that it is defective, and they need to inform the operator of the bicycle's status using an app. Okay, but what they're doing here is they're depending on the user to notify the operator in the case of a malfunction. If that's not done, obviously they cannot know that their bicycle is damaged. And there's a risk then that someone takes a damaged bicycle out and they have an accident because of some faulty mechanism in the bike. So it's not ideal that they're being notified, that they have to be notified by the user. What we'll see is that that's one of the drawbacks for bicycles. It's not a drawback really for the hoverboards because they've all of these electrical components built in and they've sensors built in. So they're constantly sending that data back to the Runnabout team that analyzes that data so that they know they're not relying on users to flag up that there's damage to one of the hoverboards. So that lessens that risk, but that doesn't exist with the bicycles. So what bicycle sharing companies could do is try to work in some sensors, some electrical components that could communicate with via the Internet of Things, via being connected to the central systems. So you've got this machine-to-machine communication where problems are being flagged up, and they're not relying on users to tell them that there's something wrong with their bicycles. Okay. bicycle sharing schemes, in spite of these few teething problems and these regulatory burdens, continue actually to be popular in many countries, and their use is actually increasing steadily. However, there are a number of competitors coming in that we're going to talk about now. But what we're seeing is that, the bicycle sharing schemes, they're the first mover. They're an old reliable. So the alternatives are electric bicycles, first of all. So very like the traditional bicycles, except they have a battery-powered motor. That means there's less pedaling involved and less effort involved, okay? But there's still a little bit of effort involved. With the electric scooters then, it's taking all of the effort out. No effort required. The electric scooters are entirely powered by the batteries that run their motors or power their motors, okay? And the problem is, though, with the electric scooters that they proved controversial because they're ridden on pavements and there are accidents that are occurring involving pedestrians, because you can get up a good speed on electric scooters, and because you're using them on pavements, it's very, very easy to catch someone by surprise. Often they don't generate a lot of noise, so people don't hear them coming. And in a number of markets, they're generating negative press in recent months as they become more and more prevalent and more common in city centres. So with that negative press, obviously comes pressure on government bodies to actually take action and maybe even to ban them outright. So I think, definitely Runnabout needs to be looking at electric scooters and seeing what's happening there in terms of regulation and anticipating that the same will happen to them. So the electric scooters, they're more versatile as they can be used on roads, but they can also be used obviously on pavements. They're not damaged or dangerous, even if you encounter potholes. So that is one of the drawbacks actually with hoverboards. So they're a little bit more robust, they're a little bit quicker, but a little bit more dangerous and a little bit more likely to lead to accidents that can be actually quite dangerous. There have been a number of cases, in fact, where users of electric scooters, they've been going at a good speed, they hit someone, they catch them in a sensitive area or whatever, and it's led to deaths, in fact, and that obviously has led to lots and lots of pressure on authorities to take action. So hoverboards are the newest of these micromobility services, and they can be ridden on pavements in a city context. They're running with a battery, powering the motor as well. They're slower, though, than electric scooters, so there's less impact if you are involved in an accident. So that's certainly something they can take to regulators if they want to clamp down on electric scooters for being too dangerous. They can say, we're going obviously at slower speeds. They're not likely to be leading to deaths, etc. The danger is, though, that government kind of takes a one-size-fits-all approach and regulates all of these micro-mobility services in the same way.